So the question is, can I buy an annuity with cash? The answer is yes, but I'm just going to tell you, I'm freezing. My team, for whatever reason, has taken a person who lives part of the time in Florida and part of the time in Las Vegas and stuck me in some winter wonderland, and I'm freezing. It's like 9 below here. I can tell you where it is because that's a secret. But you know what else is a secret? The music I'm getting ready to play right now. So can you buy a pension annuity with a lump sum? The answer is yes, and that's really the best way to do it. Now, pensions are kind of the albatross that no one really knows about because less than 10% of the private companies out there even offer pensions anymore. If you work for the government or something like that or labor union, you probably do have a pension, and that's great because guaranteed income for the rest of your life is a fantastic thing to have. Fortunately, all of us have that in the form of Social Security, which is the best inflation annuity on the planet. But when you're looking to buy a pension annuity for yourself or yourself and your spouse or partner, realize this, the pricing of that pension annuity. So when people ask me, hey Stan, the annuity man, how much will a pension annuity pay? It comes down to your life expectancy or life expectancies at the time you take the payment. Interest rates play a secondary role. Let me repeat that. Interest rates play a secondary role. It's all about life expectancy, period. End of story. So when you say, well, if I wait 5 years to buy my pension annuity, will it have a higher payout? Yes, because your life expectancy is less, which means there'll be fewer payments, which means those payments will be higher. So when you buy a pension annuity with a lump sum, if you say, Stan, okay, I have $200,000, IRA, non-IRA, doesn't matter. Just the taxation of how the income's going to come out is going to be different, but the guarantees are the same. So Stan, I have $200,000. I just want it on my life. I'm going to need a couple things from you. I'm going to need where you live, state of residence, your date of birth, if you're going to set up joint with a spouse or partner, their dates of birth, and then I can run the quote, quoting all carriers to find the highest contractual guarantee for your specific situation. And you have to understand that these quotes are like a gallon of milk. They expire every 7 to 10 days, and the only way to lock them in is to go through the application process. So lump sum is the best way to buy a pension annuity. Yes, you can take, say, a deferred income annuity in some cases and add money over time, but personally, I believe just lump sum into the annuity, the pension annuity, and typically that's a single premium immediate annuity. That's the best way to do it. So do you have to buy the annuity with your pension fund? I got a call the other day, and I'm starting to get a lot of these calls because a lot of people are retiring or being forced to retire, or the company's making an offer to either pay them a lump sum or pay them a pension type payment. So the call I get, and this happens a lot, is, hey Stan, XYZ company, they're offering me $450,000 lump sum, or they're offering me X amount per month for the rest of my life or the rest of me and my spouse or partner's life. Which one's a better deal, okay? Well, a pension annuity is a single premium immediate annuity in most cases. It pays for your life regardless of how long you live. It's a transfer of risk, and annuities are the only product on the planet that can provide that lifetime income guarantee. So what I told this person was, what's the quote? Send me the quote, and I'll do an apples to apples quote comparison to see if the pension payment that they're offering you, by the company's offering you, is better than what you can get out here on the street by quoting all annuity companies. Spoiler alert, about 85% of the time that we found, the companies offering the pension payment is going to be higher than when I quote all carriers. Why? Because the company that you're leaving, XYZ Corp, they want to hold on to the money and then pay it back to you over your life expectancy. They don't want to come up with a lump sum, so they're making that offer very sweet for you to stay there. Now, it's not a perfect decision on your part on, well, I'm just going to take the highest contractual guarantee, because if you say, well, they have the highest payment, I'm going to go with them. You have to factor in the claims paying ability of XYZ Corporation, your former employer. Can they back up the claim? Period. Now, this was an interesting situation because the person really didn't need the income to start right now. So I advised them to take the lump sum, roll it into an IRA, manage the asset, and then call me when they did need income. But if you're the person that's getting that offer and you need the lifetime income stream, and the lifetime income stream guarantee offer from XYZ Corporation, your former employer, is higher than what I do an apples to apples comparison quote for, then you have to take into account, can that company, can your former employee back up those claims for the rest of your life? If you don't think so, then let's go out here in the hinterlands of the annuity world. Let me quote all carriers and find you a highly rated carrier, a AA plus rated carrier that will back up those claims that you feel comfortable with. So can you cash in an annuity like a pension annuity at any time? The answer is no. Think of it like this. I'm from the Carolinas. Some people say, well, I can hear some kind of twang in there. I can really twang if I want to because that's just what I do when I go back to the family reunions. But typically I try not to do that. But back in the South, we went out to the water spigot, and the water spigot is the spigot outside the house. Think about ripping the knob off the water faucet, the water spigot, and water just flowing, you can't stop it. That's a pension annuity. When you turn on the income stream with a pension annuity, a single premium immediate annuity structure, which is a pension annuity structure, that income's going. It's flowing. It's coming. People say, well, am I ever going to get my money back? Yeah, but you're going to get it in payment form. Now, understand that pension annuities, single premium immediate annuities, can be structured the way you want them to be structured. They can be customized. The two questions, what do you want the money to contractually do? When do you want those contractual guarantees to start? Those are the two questions I ask everybody. If you said, I want a lifetime income stream, but I want to make sure that evil annuity company doesn't keep a penny when I die, if there's money left over. Okay, we can structure it like that, but you can't pivot and say, well, I've gotten 5 years of payments for my pension annuity, my immediate annuity. I'd like to stop that and just send me the balance. Not going to happen, Chester, okay? That's not the way the product is designed, period. That doesn't make it a bad thing. You just need to know that going in and make sure that the money that you're putting into a pension annuity, a single premium immediate annuity, is allocated properly and in proportion. One of the things I see a lot is people try to put too much money into an annuity. I know the annuity guys are like, don't say that, Stan, the annuity man. We want all money into annuities. No, okay? In fact, when it comes to pension annuities, what I like to do is use as little money as humanly possible to solve for the contractual guarantee. I'll give you an example. Person calls in the other day and he says, hey, Stan, we're looking at these immediate annuities. We kind of need the pension annuity set up for me and the wife. We have about $500,000 we'd like to get quoted. And I went, okay, we can do that, but let me ask you a question. What's the income guarantee you're looking for? You want it to start immediately, that's fine. We can do that, and we can quote the $500,000. And his comment was, well, we kind of need $2,750. Not counting inflation, because there's not an annuity on the planet that can address that perfectly. But we need $2,750 a month. We could get that, that's perfect. I said, great. Then let's reverse engineer the quote. So I can reverse engineer the quote, solving for the $2,750 and use as little amount of money as possible to contractually solve for that. So what happened? We didn't need to use the $500,000. We used more like $375,000. We guaranteed it. He kept the initial money in the markets, doing what he needed to do to get growth, but yet we put that income floor, that guaranteed pension amount in place. By the way, just to address inflation, since I brought it up and your brain went, inflation. I'm going to talk about that. With pension annuities, yes, you can attach what's called a cost of living adjustment increase, COLAs. You can pick the percentage. You can say, Stan, I want the percentage. I want my income to increase by 3% every year. Now, before you get all excited and go, that's exactly what I want. Annuity companies don't give that away. Understand that. So let me do a visual, okay? You're buying a pension annuity, a single premium immediate annuity. Here's the annuity, same annuity without a cost of living increase. Here's the one with a cost of living increase. Annuity companies don't give that away, okay? So if you want that, fine. But what I typically do, if you say, Stan, I want a cost of living adjustment increase, I've made up my mind, I know what I want, great. But I'm going to show you the same annuity with and without so you can make that decision. That makes sense for you. Okay, so I talked about the reverse engineer quotes. You got to talk with me, the Annuity Man, Stan the Annuity Man 101, and I can run those quotes for you. You can go to my site at The Annuity Man and run quotes yourself, just putting a lump sum in and seeing what would be paid out. Also, too, I've written a book on pension annuities, single premium immediate annuities that will ship to you for free and under no obligation. But the question is, can I buy a pension annuity with cash? If you take that question literally, not with cash, don't send me a bunch of cash like a drug lord. You got to write a check, or you can wire it. It's got to be at a bank or something like, or a financial institution or something like that. Do me a favor, hit all the likes and subscribes and tell a friend and do the comments and all that stuff. Why? Because I'm Stan the Annuity Man, and I'll see you on the next Stan the Annuity Man video.